All right, everyone, let's go ahead and get officially started. Once again, thank you so much for taking the time to be here. Welcome to today's webinar. It's titled, The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I am the Manager of Retirement Services here at VectorVest, and I'm really excited about spending the next hour or so with you. I hope you are as well. In fact, I'm going to start all of this off by offering you a pretty bold promise here today. I'm going to promise you that in this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. I'm not going to guarantee it, but I'm going to show you how you can begin to do that. And Minas, hopefully I'm saying your name right, well, I don't see this often, from Norwalk, Connecticut, which is my hometown, born and raised. Technically born in Stanford Hospital. Minas, thanks for being here. Good to have you. From my hometown. Wonderful. Minas, I'll tell you a little about myself. I was a cop there for about 10 years, a long, long time ago, but I'll tell you about me in a minute. We're going to build wealth, transform your legacy, and live financially free. Okay. That's our goal. Tell you a little bit about myself here. That's me with a picture I just have to replace here. I've been at VectorVest for about 16 years now, and I'm manager of retirement services, and I've enjoyed every minute of it. I moved down from Connecticut, from Norwalk, Connecticut, back, and it's just going to be over 20 years now. Came down, got tired of shoveling snow. I was working on a trading desk for a large market making firm through the mid to late 90s, right up to 2001. And then I decided my two boys were young enough. My wife and I decided we'll come down to North Carolina, and several years later found VectorVest and have been here ever since. And I always tell the story that, I took my Series 7 back in 1992. So I've been in the industry for a long time. And again, here at VectorVest for about 16 years now. And then because I see Norwalk, Connecticut up there, I have to tell you, maybe 3 lifetimes ago now, I was a police officer in Norwalk, Connecticut for just under 10 years. And so I use that to tell you that if any point during this presentation, it sounds like I'm telling you what to do in a straightforward way, that comes from that. You don't forget those things. That's me. And that's what we're going to do today. Let me lay out our journey. What my goals are. Yes, Minas, I am. It's a small world, right? The answer is yes to that. Our journey today. Okay, this is what we're going to walk through. We're going to talk about the VectorVest 3P investing model. Okay, I believe all investors should know, especially those who are retirement minded and looking towards that. I'm going to talk about briefly the 7 signs that you may not be ready for retirement. I want to talk about that when we get to the 3 core strategies. To me, the most important is going to be how to protect your assets. Right? This has to come to the forefront in years like we've experienced since late 2021, right up until today, quite honestly. So we're going to talk about how to protect your assets through markets like this. Once we know how to protect them, because I believe that's the most important aspect of what we'll talk about, I'll show you the most effective ways to grow your portfolio. So we'll talk about buying good quality, safe stocks that are rising in price in a rising market. Right? That's how we'll talk about that. Then as I go through the 3 P's, you'll know that one of them is providing a steady income. So we're going to talk about how to generate income, which is great if you're already retired or soon to be retired. Right? Especially now, I know inflation has come down a little bit. Its prices are still high. Oil price, gas prices at least come down a little bit, but we still have that need to generate that safe, steady income. And then at the end, we'll of course have the time for any questions, comments, concerns, anything you guys want to talk about. And as I said, I'm lucky to be joined by my friend and colleague, Mr. John Marabu, and he'll be here answering questions. I'm going to try. what I'm supposed to do is go through the presentation and answer the questions at the end, but I'm not always really good at that. If I see a question in the chat box, oftentimes I'll try to address it quickly. But just know I want to get through the presentation, and we'll have all the time we need at the end here to talk about whatever you guys want to talk. Okay, so if you guys are ready, turn off all the distractions that you might have. Try to stay focused on this. Listen, I know you're not going to turn your cell phone off, but at least put it on mute or vibrate, whatever. Try not to multitask. I don't want you to miss anything important. I believe this is going to be important for you. So if you're ready to do that, let's just jump in. Now, again, first of all, VectorVest has been around for, I don't know, 30, 35 years now. After decades of working with retirees, what we've determined, we found that the retirement investing model that most people have been taught is broken, right? The markets change over time. A lot of things change over time. We believe that basic model has been broken. One of my goals today is to tweak that model, okay? Fix that, and so that you can put your retirement on solid footing. And that's one of the main goals of what we're going to do here today. And what I'm going to talk about, and what I mentioned earlier, is the model that we use and has proven to work, is what we call the VectorVest 3 Ps investing model. So hopefully you have a notebook or pen and paper, whatever, to draw this out with me, because these are going to be the 3 core pillars we believe you need to have a successful retirement plan. So again, we call them profit, provide, and preserve. So let's start with profit, right? When you think of profit, when you hear me talk about that P in this pyramid here, you can also think of the word growth or capital appreciation, right? This is the allocation of your retirement assets into the equities market that's looking to grow your portfolio safely and steadily each year. It's not going to be your entire allocation, right? It's going to be part of the pie chart that I'm going to show and how we're going to allocate these assets. And you can adjust it a little bit over what I'm going to say, but we're talking about growing your portfolio. When we talk about provide, as I mentioned, we're going to talk about providing income, right? A system, process, techniques to generate a safe, steady income. Okay, we're going to do that. And we'll get into more detail, but we'll talk about quality dividend stocks. And hopefully I don't scare anybody in the room when I mention the phrase covered calls. So we're going to talk about those. And then finally, preserve. As I said, when you think of preserve, think of protect, defend, right? I took the oath I talked about earlier, long time ago, 1984 to be exact. Protect and preserve and defend, right? I just changed my oath to your retirement net worth now. Okay. Preserving your capital is simply a protection plan for capital preservation. Because what good is growing your portfolio? What good is generating that income if you just don't know how to protect it in markets, as we've seen over the last roughly 2 years? Okay. So when you're able to master these, the 3 core pillars here, that's when you'll find that financial freedom, we believe. Now, I mentioned earlier when we were laying out the steps here that we're going to talk about, and I'm going to go through this kind of quickly here, 7 signs that your portfolio is not or will not be ready for retirement. Okay. Let's go through the first one. Now, I'm not not a fan of trust the government, right? The point here is that what we don't want you to do, or what you shouldn't want to do for yourself, I should say, is look to Social Security to provide the only income needed to retire happily. Right? There's a lot of hurdles when you do that. If you look at different statistics, 61 study says 60% of non-retired workers feel that Social Security won't even be around when they retire. I personally don't believe that, but a lot of people do. Even if it is still around, here's the key here, right? The Social Security website itself states that Social Security was never intended to be someone's sole source of retirement income. It's important and it helps, there's no doubt. Okay? But it was never to be the sole source of your income. So we don't want that to be, what you rely on. Just that. So what a lot of folks do then, number two, saying you may not be ready, is a lot of people just save their money, which, listen, is a great idea. But when you start putting it under the mattresses, counting on it to be there when you retire is not always the best retirement plan either. As you know, inflation right now, if you just let it sit there, you're just losing value of that cash that you have sitting there. Now there are short-term, whether they're CDs or high interest savings accounts, whatever it might be, for your cash. That's the better way to do it. But higher inflation is certainly costing you if you're not careful where you put it. One way to know that your portfolio may not be ready is if you have just kind of have this idea of set and forget, right? I'm going to buy the Magnificent Seven stocks and I'm just going to go to bed and forget about it. We were just doing some things for this week's special. I shouldn't give it away, but there, if you look at just buying and holding stocks like that, right, you're going to suffer large drawdowns if you have just a buy, hold, set it and forget it. I don't care what stocks are in there. But you have to have a plan. You have to have an approach. Okay? Otherwise, you end up having these huge drawdowns and it takes forever to get your money back, right? They have a 50% drawdown. I just use that number because it's the easiest mathematical one for me. You have a 50% drawdown. Your money has to double from there just to get back to even. Right? We don't want that to happen. We also don't want it to be, or you should know that your portfolio is not ready if you're just looking at a lottery ticket. Okay, the old commercial, all it takes is $1 and a dream. That is not a retirement plan. Okay, we don't want you playing literal lottery. Well, listen, I buy lottery tickets too, but right, it's not my retirement plan. Okay, you have to have a plan in place. Lottery tickets are not. Another sign may be that you're paying someone to help you make decisions, which, is not the worst thing in the world. If you have someone helping you that you trust, right? But one of our subscribers, Robert, he told us this going back when the financial crisis hit in 2007. He said his professional advisor just said, write it out, do nothing, right? And Robert told us that by mid 2008, the portfolio had lost 40%, and that his retirement were in ruins, total despair, and looked like I'd have to go back to work. What he had told us. Similar idea here when you're paying someone to make decisions for you. Carol, a little bit different on the idea here, but she let us know about early 2017. She had time to take an in-depth look at what the broker that she had hired was doing to her inheritance. Now, what happened here was she had hired an advisor to help manage the inheritance. Her dad had passed away. Okay. And she hired someone to help her out. And then she realized what the broker was doing. And these are her words. She was shocked that he had just a mishmash of cookie cutter funds after fees. The result, was less than 1% annualized during a time when the market should have been doing much better than that. So if you're paying someone to make decisions that you're not comfortable with, or that you aren't having a hand in, that might be a sign your portfolio is not. Another sign, you're cutting back on your spending because you're worried that you'll run out of money. Now listen, spending less, being frugal is always smart. But if you're spending less because you're worried, that you're really going to run out, and a lot of these folks on TV, they write books about, hey, you want to spend less. God forbid you go to Starbucks and buy a coffee, They tell you, that's how you ruin your retirement. I'm not a big proponent of that. If I want a nice cup of coffee, I'm going to go out and get one, right? But it is smart to be frugal. It is smart to use your money right. But if you're doing it because you're really worried about, the next bill, then you might not be ready. And then finally, if you decided to work longer than you originally intended, it may mean that your portfolio is not ready. Not that there's anything wrong with continuing to work as long as you feel like it. Key there is that you are choosing to do it, not that you're forced to. You're choosing to work, whether it's a family business, as Dean mentioned earlier, where he works, or if you just choose to want to do it to get out and be active, then that's fine. I'll end that portion on this little checklist here, retirement unreadiness checklist. If you're doing any of these things, you're in the right place here today. So do me a favor. In the chat box, because again, I want to interact with you as we jump into the 3 P's now and the core pillars. I want you to type in. Let me know if you were checking these boxes, how many of these items would you have checked off? Like type in 1 of 7, 2 of 7, 5 of 7, whatever it might be. And just type that in 1 of 7, 2, maybe none. I guess, a lot of times we get 0 of these. Tim says none. Charles says 3 of 7. John, Stan are saying none. Joe's got 2. Mina's got 1. Yeah. All right. So 2 is the most, maybe 3. A lot of folks say none of these. And listen, these are pretty extreme. And we get a lot of nones or zeros. Dean put 5. Listen, sometimes we're all in different places. That's why we ask. It's good to know. It's good to get an idea of what you guys are looking to do. But I think whether you put 0 down or 7, nobody put 7, but whatever you put down, you're in the right place here, because even if you're not in any of these places, right? Even if you're not in any of those places, you still, I believe you're here because you're looking for a better way to build and manage your net assets, right? Your retirement assets. Okay, so the idea here, whether you got 0 or 7 on that list, is to take control. Right? I think you're here because you want to take more control over your net worth. So these strategies that we're going to talk about will give you the techniques to both manage your own money, as well as if you give information you need to, give you information that you need to watch over somebody else's shoulder. If you're paying an advisor, you still should know what questions to ask and how to do that. So that's our goal here. Strategic shift, we call them. We're going to go through a few of these throughout the presentation, and we're going to talk about the strategic shift. So we want you to go from not being in control to taking control. Okay, that's what we want you to do. So let's start here. I mentioned earlier, talking about the 3 Ps, that protecting your assets, capital preservation, to me is the number one most important concept of building and managing your retirement portfolio. When you're taking control, we said that strategic mind shift is. So we want to be able to protect our assets. Right? Like driving a car or getting on an airplane, right? They make you put your seatbelt on first. The first thing you do is buckle up before you start driving so that you're safe, right? So that you can ensure that you're going to be safer. So instead of worrying about the market falling, wiping away a chunk of your nest egg, you need to go back to the early 80s, the Strategic Defense Initiative. Remember the Strategic Defense System? That's kind of what I like to call this, right? So that's what we're going to look at for the preservation portion of this. Right? Because what happens? A lot of people get caught by surprise when the market drops. Not everybody's watching, every newscast or reading every headline. And, when that market starts to drop, you have to be aware. And then after it happens, right after the market goes down, right? What happens is you hear people on TV and advisors talk about what you should do now, right, to try and make your money back. Well, that's a little, that's a little coming to the dance a little late, right? And this has been especially true for a lot of people again through well, listen, we've been 2 years now. November of 21, this market began to move down, and we've had I'll go as far as to say it's been a bear market for close to 2 years. Yes, we've had runs and we've had movements to the upside, but from a movement of the major indexes, things have been tough. But if you understand how to insure your portfolio, if you know how and when to insure your portfolio, you're going to be much better off. Okay, you insure your house, your car, your life, your health. I always joke, my wife and I, we have insurance policies on our 2 dogs. Same should be true for your retirement net worth. So, what I want to do is just take 2 or 3 minutes and walk through kind of a quick history of the market, right? Now, this is what's called a market timing graph from the VectorVest program. Now, I know I didn't even ask earlier. I don't, of the people in the room, I guess you can type in either yes or no. Are you a current subscriber to VectorVest? Type in either yes or no. Vast, well, not even a majority, 100% of everybody here is a VectorVest subscriber. So far, anyway, no no's have come. All right, so then you guys know what a market timing graph is. Good. So I won't spend too much time explaining that because you're all subscribers. This is the VectorVest composite represented in candlesticks, and it goes all the way back. We have a long footprint, by the way, in the VectorVest program. This goes all the way back to 1999. So the question is, as we look at this historical view for just a minute or two, I'll ask you guys, have you ever bought or owned a really good stock and watched it drop when the market dropped? I know the answer to this. I know my answer to it, right? And the answer is a clear, unequivocal yes, because if you type in no, I just simply believe you. We've all done it, right? The market goes down, even though we think, our stocks go down, a rising tide or a tide that's going out takes all boats down with it, right? To say rising tide lifts all boats. Well, we've all been there. But let's zoom in on a few of the biggest market moves that really crushed a lot of people and crushed their entire portfolio. And again, I know I'm going back historically, and we're going to focus on a little more recent time here. But again, we've been around a long time. And one of our subscribers, Lynn, he wrote us a note telling us during the dot-com boom, he took 80 grand and increased it 5 or 6 times over. However, in 2000, I proceeded to lose almost everything over the next 2 years. And he was not happy. These are his words right here. And he needed someone to blame. That happens way too much. You make money during the uptrends, but if you don't know how to protect it, you give it all back and you spend years trying to recover those losses. Excuse me, I'm sorry. The way I like to say it is, if you have unrealized gains, right? Those are not really gains. Okay? Sorry to tell you. Unrealized gains are not real gains. You have to know how to protect them. You have to know how to manage them, keep them, right? Rather than spending years trying to recover those losses. I'm guessing also there are folks here who remember the 2008 housing bubble, right? When the market turned over, the average mutual fund dropped over 40%. And our friend Rob from earlier, he talked about his retirement portfolio losing over 40% at that time. And if we continue to move, we remember the COVID sell-off. Now that happened to be a much shorter term, right? So we didn't have to wait too long, but the S&P 500 did drop 34%. If you panicked and weren't sure how to manage a portfolio there, here you got hurt there as well, even though the market did come back. Right. Then we had, from November 21st to October, where we kind of bottomed out. The S&P, that's almost a full year there. The S&P 500 was down over 30%. right? Which would give us that bear market. And then we've seen even through today, we've had what I call sort of rallies, like last week. Even though it was a strong rally, I call it kind of a sort of rally. Many folks are worried and should be worried that the market is not done falling and not done having its volatility, right? What so what do? Some people say that you can't time the market. You hear it all the time. Market timing is useless. You can't time the market. Well, I'm here to tell you that that is the people who say that are wrong. The people who say that they can't time the market because they don't understand what it means, right? The truth is you can't predict the market. We don't try to predict where the market is going, but here at the VectorVest program, we have very special proprietary indicators that give us an idea of the trend of the market. We can analyze what the market's doing and follow the trends of the market. So you don't often hear that from the talking heads on TV, right? They rarely, usually much later than we ever would, tell you that, hey, it's time to get out of the market. The market's in a downtrend. Usually they're just giving you their one or two stock picks. So be careful where you get your information. Let's look at real quick how to use the information so that you'll never be on the wrong side of the market for more than a week or two. Okay. And help you ensure that you'll know exactly when to insure your portfolio so that it doesn't collapse. So we look at, again, I'll focus quickly on these. 2008, we had the COVID, and then we had the November 21 come down. We'll start with the financial crisis. And the goal here is just to show you how important it is to know when to buy, right? The VectorVest mantra is, you know, when to buy, what to buy, and when to sell. You have to know when it's okay to buy. Right. Right. Kevin says we can't even get 2 days in a row where we have a green light in the VectorVest price column. Yeah, I don't even remember the last green light we closed with. We got to be prepared for this. You have to know what to do. So back on November 2nd, 2007, just off the market top. And my purpose here is to show you that there is guidance out there for you, especially from VectorVest, right? This was Dr. DeLito writing, the confirmed down signal that we received could be the entree to a long bear market. Don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. That was written way up here when the market was at its peak there in 2007. You were with us. Hopefully you heeded that advice. If it didn't, do you think maybe that might have helped you? It's a pretty clear-cut analysis of what's going in the market. Even if you go back to COVID, right now, we didn't know exactly what was going to happen. Nobody really knew the kind of effect and what that pandemic would do. But the VectorVest program, days before that peak, we noticed warning signals in our market timing indicator, right? And we said that there were, during that January high, that there was a bearish divergence suggested that downside risk outweighs upside potential. So without even trying to guess the headlines that were coming, right? We knew exactly where the market stood and that there were things to worry about, right? There were things to worry about. A week later, we wrote in our strategy section, prudent investors should not buy stocks. Aggressive investment traders should play the market to the downside. I don't know. You heeded that advice. Was that a pretty good piece of advice to get? February 21st of 2020. Came again in November. Prudent investors should not buy stocks. Prudent investors should not buy stocks. This is important information. It culminated with our confirmed down call on November 22nd of 2021. And then, things have been pretty rough ever since. Now, again, we've had some sort of rallies, but overall, the market has been in a downtrend since then. So hopefully you all found that information helpful there. If you were using VectorVest at the time. But now you know what to look for, and you know when to take action, right? That's that when to buy, or in this case, certainly when not to buy, and when you need to protect your portfolio. So with that in mind, understanding that you can track the trends of the market, you can in fact time the market by recognizing short, intermediate, and longer term trends, right? Once you understand that, now you can protect your account using portfolio insurance. And you'll know when to do it, not just, at any, random time, right? Where you're not using it when the market tells you it's starting to move up, and I don't need to use that insurance money for that. Now, I'm going to go back here and again focus on kind of zoom in here. And this is going back on June 20th. We had a VectorVest composite buy sell ratio. The MTI was falling. Okay, right before our retirement coaching group session. Okay, I went in and I bought some put options. Right, this is the way we like to protect our portfolios. Right, you can do this. You can buy puts on individual stocks. Right now, I'm looking at the overall portfolio insurance. Okay, and then I'm sorry. Let me just clarify here. This is a 1-year look back, right, on the VectorVest composite. Okay, we see the volatility there. What I wanted to do here is just zoom in on the recent here. So I'm zooming in on that recent August 9th confirmed down. So again, on June 20th, we had, all of these things were falling right before the coaching group, that our retirement coaching group. I went in on that day and I bought 3 protected puts, right? I bought put options. And now I've zoomed in a little more. So here is the day that I actually went in and bought put options. Okay, we got to confirm down. I'm sorry, I don't have the signal on here. We got to confirm down on August 9th. But even before that, the market had been rising, but the headlines were scaring me a little bit. We had a red light in the buy sell ratio. The other indicators were falling. And so I said, you know what? We have positions, we have equities here, and it's time to protect them. So on July 20th, bought 3 SPY, and it was trading right. This is the VectorVest composite. The SPY was trading at 454 at the time. Okay, this is the market timing graph showing you what it did. I bought, for the overall protection of the portfolio, the S&P 500 ETF. I bought puts on it. Right, for those who may be new to puts, put options, just in case you're new to options, you don't have to be an options expert to understand it. What is a put option? It's simply a contract that you enter into, that you create when you buy a put. Gives you the right to sell a stock or an ETF at a certain price by a certain date. So all this means is I bought the right to sell 300 shares of SPY at $454 per share. $454 per share. It costs $5.37 per share, or $1,600, to insure what at that point was roughly, give or take, a $50,000 portfolio. That's an insurance policy. So what happened was, again, and this is still the market timing graph, but on August 10th, okay, we sold those 3 SPY August 454 puts for $9.02, or a profit of just, I'll call it $1,100 if you don't mind if I round it up. So we were able to mitigate any losses on our overall portfolio, right, with a nice return. I continue to do that again on another Tuesday session of our coaching group. We look at the market timing trend and we said, okay, let's go on September 19th. Bought 2 more. The SPY was trading at 441. I buy at the money puts. This one costs $5.52 per share, or just $1,100 to again insure my portfolio. How many you buy is going to be up to you, right? How many you buy is going to be up to you. $100,000 portfolio, I suggest you buy 3, 4, maybe even 5 protective puts. I buy them at the money. You got more $200,000, $250,000 equity portfolio. You want to buy 10 or 12, something in that range. Okay. And I go 30 to 45 days out. Okay, so we did it again. I bought some more just as protection on some positions that we had. What happened? Well, the market continued to move down. Sold those 441 puts. This was a 100% profit here. Made $11.04 per share. Another $1,100. And then finally, we did it one more time on the 27th. This time I did it with 4 contracts. I closed these a little bit quicker. Cost $2,700 to open that insurance policy. Market was a little bit volatile, but we got out on the 6th and made another just under $500 profit on. Okay. I want to be totally transparent here in how we do this and what we did. I will tell you, even though I didn't show it here, I'm telling you that I did buy put options on the portfolio here. They were profitable, and then we had what I call these sort of rallies. And our risk management technique had me giving back about almost $600 on that trade there. So I just want to be clear: not everyone is profitable, and the fact is, I almost hope that they're not, because all it means is that I'm protecting my assets here, and I'm not giving back money from my net worth, and it's just the insurance policy. I always use the example. If about my car insurance, right? I check my bank account every month. I have a lot of, auto pays, ACHs that go out. When I use Geico. Geico's paid whatever it costs for the monthly premium. I don't get mad because a tree didn't fall on my car this month. I don't get mad because a tree didn't fall on my car, right? That's what insurance is. Better to need it and not have. Have it and not need it than to need it and not have it. So that's the power of understanding how to, and of course you can do this on individual stocks. You can buy put options on individual stocks for earnings reports, whatever else it might be. Okay. You don't have to be an options expert to buy a put option to understand how to do that. Okay. In fact, we had a customer. This is Elaine. This is from a little while back. And this always means a lot more to me than anybody can realize. He said, Jim, because of your teaching, I hedged my portfolio with puts on the SPY, saved a section of my portfolio. He started with just $835 for insurance and netted over $23,600. Portfolio is not only saved, but brought positive because the ability to protect your net worth. It's a very important part of building and managing your retirement portfolio. And I'll ask you guys to interact with me. How much would portfolio insurance have benefited you? And I don't even need to go back to 2008 or 2020. How much would it have benefited you? Hopefully you were protecting just to June of this year, July of this year. Type in if you think it might have helped you out a little. Sorry, just taking a sip of water. Dean says substantial. Yes. Joseph says a bunch. Bill said, would it be beneficial to purchase the SQs instead of options? Bill, yeah, that's another way to do it using inverse or contra ETFs, where that you buy long the contra ETF and they go out and do the shorting for you. Yes, and by the way, I do use the Qs. I buy options on the Qs. Sometimes IWM, the diamonds, DIA tracks the Dow. So you certainly can, as long as you're doing something to protect your portfolio. But yes, that you don't want to hold them too long term. And I could do a whole sessions just on contra ETFs, but short answer is yes, it could help you. You do it timely and do it the right way. Yep, Mina says would have helped a chunk. All right, great. Okay, so that brings us to our strategic defense. Strategic shift. Number 2, I want you to be able to go from worrying about what could happen and being unprepared when it happens to where you have this strategic defense system in place, which protects your hard earned assets. Very important part of retirement investing. And that's how you'll be able to live up to the promise I made earlier, building wealth, transforming your legacy, and living financially free. Go from being worried and unprepared to knowing exactly what. Okay, I'm going to shift gears here. We're going to talk about profit now, right? The 3 P's. I talked about preserve, to me, the most important. Now let's talk about profit and growing your portfolio. For those, most of you are VectorVest subscribers, we have our mantra, right? Buying safe, undervalued stocks that are rising in price in a rising market. Right? Pretty darn good strategic narrative to want to build and grow your portfolio. So if you're not seeing the returns, if you're not seeing the returns that you want to see, right, then what we don't want you to do is trade like somebody you're not, right? A lot of folks want to hit the home run, right? Let me buy a whole ton of some really cheap stock and want to hit the home run. That's fun, right? It's great. But what happens when you don't hit the home run? You strike out. And the problem is when you do that, when you're not seeing the returns you want, a lot of folks let emotion get in the way and think that the answer is to go faster. That they start trading as if, they're now day traders trying to get back money they lost out on by not managing it properly. You start to trade or invest like someone you're not, something that doesn't fit your investment profile. So don't try to become a day trader or short-term trader to make money back that you might have lost. And we use the reason this is up here, right? Well, my boys are older now, but when I was teaching them how to drive, right? I'm sure a lot of you can relate to this. If they were struggling, you didn't tell them to smash on the gas pedal, right? Go faster, right? You told them to slow down. So it's kind of the same thing, same thing here. And it really all starts with a quote from our founder and mentor, an all around great guy, Dr. DeLito, the founder of VectorVest. Right? He taught me in a quote he used. I heard him use many times. Good portfolio management starts with buying the right stocks. So I have a sports team up here. You could put a hockey team, football, baseball team, whatever you want. But with any sport team, right? I'll use the analogy. You fill the team with really good players. If you have a roster of good players out on the field or on the court or the ice, right? That's going to make your team do better. So it's just the same as building a portfolio, right? If you have good quality, safe stocks, right, that's where you need to start, having the best players on the field. So with a retirement-minded investor in mind, I'm going to share the checklist that we look at to determine what, a safe company really looks like. This is what we call the stock safety checklist. We have an indicator called relative safety. Relative safety is a proprietary indicator. These are just a handful of other equations that go into determining that relative safety indicator. We talk about earnings consistency, company size, volatility, debt to equity ratio, business longevity, dividend history. These are all important factors that get put into this proprietary indicator. Does the company make money quarter over quarter, year over year? Company size is taken into account. The company spreadsheet is taken into account. Does that company have money to withstand any headwinds that might come, whether it's the economy or specific to their company? How long has the company been around is an important factor. Dividend history. Right, a good safe stock doesn't have to pay a dividend, but if it does, it darn well better continue to pay that dividend. As Dr. D used to say, there's no bigger black eye for a company than to cut or suspend a dividend. So what I want to do and talk about that relative safety indicator for just a moment is go into the VectorVest program, and I want to start with a watch list that looks at, I created my own watch list here, and it's called 40 well-known companies. I'm putting 40 stocks up, 40 companies up here that you are familiar with, made up of places where you shop, where you eat, what you drink, where you spend your money. Okay. And whoops, I'm sorry. Back to the spreadsheet. There we go. It's going to be of stocks that you recognize, stocks where you spend money at, right? And what I want to do is take these stocks and show you how to rank them and show you the power of what we call relative safety. Now, this list of stocks is not just randomly here. In the VectorVest program, as you know, we sort them by our flagship indicator called value, safety, and okay. So no matter what day you look at this spreadsheet, you'll know that the best combination of that will be at the top. However, as a retiree or somebody approaching retirement, we can be safer. So VectorVest uses this RS, or relative safety indicator, that focuses on those components that I just showed on the checklist. Now I can click on that and I can sort these stocks by relative safety. Now, you're probably not going to go out and buy these stocks, right? All 40 of them just because you know the name of them. But what I want to do is just a couple of quick tests, just to show you in a very quick way the power of relative safety. So I went back to sorting by VST. What I'm going to do is take this back and I'm going to put it over a period of time, where there's not just go back to 2 years. I'm going to go back to January of 21, just the beginning. It's just a quick look at what I want to show you. Same list of stocks sorted by VST. This is what it looked like on that date. You probably wouldn't go out and buy all 40. Let's what we call quick test the top 10 stocks. If you had and again, it's just a quick review of this. If you had bought these stocks and held them to today, you'd be up 5%, right? Versus the S&P 500, which is up over 18%. Okay, that's right up to right this moment. Okay. Not great. You didn't lose any money, but you're not keeping up with the overall market. However, what if I click RS and sort it by relative safety? And now I'm sorted by relative safety. Let's run that same test of these same stocks and see what happens. Well, look at that. Now I'm up 20.5% versus the S&P 500. Again, no money management techniques, no stop criteria, no going to cash, no buying protective puts or anything like that. And I still outdid the S&P 500. The point here is that you wouldn't hold yourself to just these stocks. So the next thing I want to do is take us into Stock Viewer. And now I'm going to look at over 9,000 stocks in the Vector. Con asked, how did I find these stocks? Con, it was just a list of stocks that you know. That's all it was. Apple, Microsoft, Lowe's, Home Depot. That's all it was. Just a random list of really well-known. Okay, so now I'm back in the Stock Viewer. Now there's 9,100. In January of 2021, which again, I chose a random time here, there were 7,200 stocks. This is what the list looked like. Now, I'm not going to hold myself to just 40 stocks. I'm going to take my entire database. I'm going to sort it on that day with the highest relative safety stocks. Again, this is just a quick test, no money management, just to make a point. I hit those, and again, with no money management, I now have 7 winning trades. ALGN really hurt, obviously. But now we're up over 10% better return than the S&P 500. And it's just, almost doubling the annualized rate of return simply by sorting them by relative safety, safer stocks. Going to be less drawdown, going to be less volatility. And that is just, again, a really quick glance at the power of relative safety. Not an in-depth backtest trading system. Just wanted to show you what the power of relative safety. So in many of our growth portfolios, we've been able over one of them's 5 years, 6 years old, one of them is a little older. where we've done more, 150% returns over 3 and 4 and 5 year periods. If you could double your money every 3 years buying safe stocks, how do you think that might affect you? Yeah, and as you're typing that in, Bill says, what if you updated that monthly or quarterly? Can you back test that? You sure can, Bill. You can go back and you can quick test over different periods. You can back test over shorter or longer periods. You could put money management techniques in there, risk management techniques. I really just wanted to give you a quick view of just a glance of the power of relative safety, right? Taking that same list of stocks and showing how much better you can do just by looking at the safe stocks. So yeah, Bill, you certainly can. And it wasn't designed to go into really, really great detail. It'll take me an hour just that. Anyway, you're welcome. Thank you. Alan says, yeah, it would significantly affect. So there's a strategic shift there, right? Instead of spinning your wheels with slow and stagnant growth in your retirement portfolio, we want you to be able to have that steady growth. Now, it doesn't mean there's never going to be drawdown. Don't get me wrong. Nothing goes straight up. But when you manage it correctly, when you employ the power of protective puts, perhaps I'm going to talk about selling covered calls in a minute. There's a lot of things you can do to protect and grow that portfolio rather than just kind of buy and hold and hope. Okay, I'm going to take a deep breath and I'm going to shift gears one more time. And we're going to go to the third core pillar of provide. And here we're talking about generating income. Remember, we talked about earlier, you don't want to rely just on Social Security or your pension to carry you through retirement. So, in order to continue living the lifestyle that you choose, you need to be able to open up new income streams. Right? A lot of these stories I read, I can't get it. They come on my LinkedIn or my news alerts or whatever saying, hey, I'm going to retire and I'll just throw numbers out. I'm going to retire and I have $1 million. How long is that going to last? Can I retire with whatever X amount of dollars you want? And it always makes me laugh because it just assumes that $1 million or whatever the number is can never grow. It's just always going to be there, right? That like for some reason you can't grow that you can't generate more income, only what you have there. And I remember Dr. D, we would talk about and we would laugh, how much money, what do I do? Was always this question we get in some form or fashion. What do I do to keep running out of money in retirement? And Dr. D would, and just only the way Dr. D could do it, he with kind of a half a chuckle, and I'd ask him, I said, Dr. D, what do I say to folks who say, how do I keep from running out of money? And he would just chuckle a little. He goes, James, just tell them to keep making more money. Right. And he would say it, kind of half kiddingly, but it's true, right? I can continue to open up new streams of income. So how do I do that? First, let's talk about a dividend portfolio. One of the benefits in focusing on really safe stocks or safe dividend stocks is they typically pay a nice dividend to their shareholders. And we want you to allocate a portion of your retirement nest egg to that ability to generate that income, right? Finding the best dividend paying companies for a lot of people is not always the easiest thing to do. You can go out and you can Google things and get a whole bunch of results very quickly. And what usually happens in many of these sources, it just starts listing them with the highest dividend yield at the. There's so many. This is just a screenshot of one, many. Okay. A lot of folks will just simply go chase the highest yields. It's not the proper way to build a dividend portfolio. So inside the VectorVest software, there's several lists of pre-built watch lists for you. One of them is called the DRIP 25 Plus. That stands for Dividend Reinvestment Plan. These are all stocks, and I just took the screenshot yesterday. These are all stocks that have not only paid, but have grown their dividend every year for the last 25 years or more. Very similar to what's called the Dividend Aristocrats. The difference that we have more here, I think there's 67. Last time I checked, Dividend Aristocrats. All that means is that the stock has to trade in the S&P 500. So this is our list as of yesterday. All of these companies have not only paid, but have grown their dividend. Now they're not randomly posted here. They're listed as by the highest VST, value safety timing indicator. Ah. Now one that I like, I actually own, is highlight that one. I took a screenshot of that graph. Now I haven't owned it this long, but this graph goes all the way back to 1997. So when we talk about finding good quality dividend stocks, there's certain criteria that you have to have, right? You have to look for earnings growth rate, right? You have to look for dividend safety, things of that nature. And VectorVest has all of these indicators here for you to find and purchase the very best dividend paying stocks. We show the dividend yield, safety, growth, and then we have a vector that puts it all into one number on that 0 to 2 scale. Earnings growth rate plays a huge part in the dividend payouts, right? So coming back to this particular stock, this is the dividend paid. You can see how it's grown, what we used to call the golden staircase, right? Where the dividend keeps growing, earnings per share grow. This is the price pattern over all those years. That's the type of stock that we're looking for. Norman, I have Dividend Aristocrats. I put my own watch list in. You can Google Dividend Aristocrats, and probably just what I did is put them into a Excel spreadsheet. And you can actually import an Excel sheet into your watch list. I know it sounds like a lot of steps, but you can. But I'll tell you what I'm going to do. I'm going to try to get the Dividend Aristocrat watch list. All right. Galen has a question about covered calls. Let's go ahead and shift gears one more time. And let's go through the second part, right? When we talk about generating income, part one is a good quality dividend portfolio. Part two is we call it, it's similar to collecting rent from the stocks that you own. You may have heard that analogy before. You own a stock, okay? You can be selling covered calls against that stock and generate income, right? It's one of the safest option trades available, right? You're allowed to do it in your retirement account. I always tell the story. I took my Series 7 exam in 1992. When I took my Series 7 exam then, the only option trade you could do in a retirement account and IRA was a covered call. Why? Because it added absolutely no risk to your current position. In fact, it lowered your risk because you got paid. So selling covered calls is a great way to generate income. And if you don't understand covered calls right now, just like if you're buying protected puts, please understand it's the most common, easiest to use, most popular income trade. You don't need to be an options expert to do it. You don't need to be, but you can learn how to do it if you don't. Here's an example of what covered call is, right? So let's say I either own, or you can simultaneously buy the stock and sell a covered call. It's called a buy right. But either way, you own at least, it's got to be at least 100 shares, right? You own 100 shares of the stock and it's trading right around 47 bucks. Okay. You have to remember, someone is willing to pay you money today for the right to take your 100 shares away at a higher price at a specific date in the future. If you buy a call option, it means you have the right to buy a stock at a certain price by a certain date. If you sell the call option, you are obligated to provide that stock. Now, if you don't own the underlying stock, it's a very, very risky trade. And you need the highest level of option trading approval to do it. But in this case, you own the stock. Right? So they're just going to take your stock away at that price. So someone's willing to pay you to take it away at a higher price. What does that look like? This is an actual trade we did in our coaching group. Own the stock at 47. Stock's trading at 47. We sell someone else the right to take that stock away at $49 a share. And they paid us $2.27 a share to do that. So they paid us 227 bucks. What are the possible outcomes there? Well, number one, the profits from the call that we sold, it gives me a cushion. Right? So if I own the stock at 47 and I take in $2, I really own the stock now at 45. So there's a cushion there, and the stock could actually go sideways or even down a little bit, and I can still profit. The other scenario is the stock could stay right where it is and kind of go sideways, give or take a buck or so. And that's fine. At expiration of the option I sold, I would get to keep the 227 bucks, plus I get to keep the stock and decide, I could hold the stock, sell it, or I could just sell another covered call against it. And then finally, I can just allow the stock to be what they call called away. Right? If at expiration the stock is trading above $49, they take that stock away from you. So I make 227 plus the capital appreciation up to 49. So what just happened? This was an actual trade. What really happened is we bought the stock. Stock went up slightly, right? And we ended up closing the trade using our risk management techniques that we learned in our course and in the coaching group. We were able to lock in $304 of income in less than a month on just one covered call trade. I know that's not, through the roof numbers, but start breaking it down to percentage wise on a consistent basis. That's generating a nice, safe, steady income. In fact, Jerry here, these are his words, hit or miss with no methodology. He went from that to being able to generate consistent income at over 2% extra each month after learning the strategy we teach here. So you can ask yourself, what would that extra income allow you to do? You don't have to type it in, but just consider that. Alan, we usually go out about 30 to 45 days is the expiration sweet spot I usually use, 30 to 45. So that's the strategic shift we have to take into account here, right? You have to go from not having enough income as you approach or are in retirement to opening up those streams of income, having that steady flow. Okay. A very important part of having that retirement that you choose to live. So I believe you showed up here today for a few reasons. Okay. Maybe your portfolio is pulled back in this really rough conditions that we've been in for really the last 2 years. A few rallies here and there. Maybe you're just looking at a way to have enough income to replace the paycheck you were getting if you recently retired. Maybe it's something else. Maybe you fear you may have to scale back your lifestyle, or you might need to rely on others. Case, I don't think it is from what. But maybe you're doing fine. Maybe everything is okay, but you're not quite where you want to be. Maybe everything's okay, and my sense is that might be a lot of what this room is for the folks who are here. And maybe you just don't have a plan to get to where you want. So today, I hope that you learned that step number one is you've got to take control of your retirement. You've got to have a clear plan. You have to have not only objectives, but a plan. An old saying, a wish without a plan is, a goal without a plan is just a wish. Sorry, I messed up a good quote. But you can have objectives and goals, but if you don't have a plan, it's just a wish, is the old saying. You got to have that plan. You got to take control. You don't need to be worried about a market collapse when you understand the strategic defense systems that you could put into place. And I hope that you learned today that you can see steady growth in your portfolio by using the proper stocks. And then finally, how you can generate income, whether it's through a good quality dividend portfolio and or selling covered calls, having someone pay you to take your stock away at a higher price. The main thing I hope that you learned today is that the secret to building wealth, transforming your legacy, and living financially free is to make sure that your retirement investing model includes the 3 P's of profit, provide, and preserve. Right? So it brings us to obvious question. How do I create this type of system in my own retirement portfolio? How do I do that? Do I do it right now? Well, I believe there's a choice. One choice is you can do nothing And as they say, right, the same old thinking, same old results. You can choose to do it on your own, maybe put together some of the things you might have learned here today, learn it by trial and error. But mistakes, as we know, can be very costly, as we see here from our wannabe card. Or you can choose to do what our friend Jerry did and thousands of others have done, and that is to get right to the solution. Why do all the work on your own when there's training available? It allows you to bypass all that trial and error and get to success much faster. Instead of taking that long way from where you are to where you want to be, learn how to take that shortcut. I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week, for 5 weeks, here's what I would get you to do. Right? It's a simple plan called the Retirement Portfolio Transformation. It's a step-by-step roadmap to secure your retirement, to live the retirement that you choose. But before we get to that, I need to point something out, right? Albert Einstein once said that everything should be made as simple as possible, but not simpler. So it's important to understand that this is not a get-rich-quick scheme. Yeah, you don't take some magic pill and all of a sudden you're going to double your portfolio. You have to commit to it. You have to put some effort in. You have to do the work. That's the way it is. It's for people who want to take control of their retirement. By transforming your portfolio, we believe, and we've proven it to happen, that you'll be able to build wealth for you and your family. And like I said, transform your legacy and create a better life for you, your children, your grandchildren. And again, it's called the simple plan. It's called the Retirement Portfolio Transformation. The easiest way for me to explain the course is to map it out for you. If you appreciate you guys staying, give me just 2 more minutes. Let me tell you about the course, exactly what we do. And the easiest way to explain it is just to map it out here. So again, we're looking at profit, provide, preserve. The retirement portfolio transformation starts with module 1, where we'll build a strong foundation for your retirement. Right? This is where you'll get clear on your goals and objectives. Right? Remember, I said a goal without a plan is just a wish. Right? So we lay out a foundation there in module 1. You'll learn how to treat your investing as a business. You may have heard of the SMART goals. I kind of allude to those and talk about those. And then creating your own vision statement, right? Because you got to have a plan. Next, we learn how to increase capital. Now we start with profit, right? Identifying the right stocks, finding the best candidates, knowing when to buy them, and then most importantly, understanding how to manage them once we do have them. Okay, so module 2 is dedicated to the growth portfolio. We're going to do the same thing. We shift gears a little bit, but we do the same thing with the dividend growth portfolio. Right? Remember, providing that income. Dividends are a source of income every retiree should take advantage of. But you have to understand that all dividend stocks are not created equal. Just chasing high yield is going to hurt you. So the outcome of this module is you'll know exactly how to identify the best dividend candidates, when to buy them, and how to manage them once you're in. Now, module 4 is where we talk about part 2 of providing income. We're going to complete it by teaching you 2 of our go-to option income trades. Selling the covered call, as I talked about, and I didn't have time in this presentation, but we also touch on selling put options as a way to generate income as well. It's very similar to the covered call. The risk-reward profile is identical for a covered call and selling a put. So we're going to talk about how the trades work, when to implement them, how to correctly set up and manage those. So at this point now, your portfolio is set up for growth, for income, and then finally, module 5, we'll talk about eliminating risk with one trade, when to be defensive, protecting both individual stocks and your overall portfolio, preserving, protecting your asset. Now, let me just talk about real quick, right? The retirement portfolio transformation. Forget this price. That's the overall value of everything that we do. I'm going to tell you what the course involves. We have 2 bonus. The first bonus we have are You take the course, we have 5 live mastery support sessions. Okay, so first of all, the 5 modules of the course are located, and I'll show you all in a minute where it's located, within the program in the VectorVest University, where you have access to the modules and a whole bunch of other resources that you'll have access to. Now, on top of the access, by the way, you'll have access to for a full year if you join the course. What we do is we have a live session, and I'll give you the dates, and we record it and archive it in case you can't make the live session during market hours, so that I can illustrate exactly what we do in the modules, and then we review and answer questions within the mastery session. Remember, they're all going to be archived. You also will get 5 weeks access to my members only group coaching sessions, which take place every Tuesday at 2 p.m. Eastern time. Right? We record those and also put them into the resource center in the VectorVest University under the Retirement Portfolio Transformation course. And you have access to all of those as well. You're invited to be there live. Can't make the live one? This is where we put all of the techniques that we learn in the course into actual action each week in model portfolios and in portfolios that have actual live VectorVest money. So we're able to do that during trading hours. So again, the total value is a lot, but because you were kind enough to spend the time here with me today, we do have a $5.95 early bird special. Okay, that's good through Monday at 5 p.m. But you're still here and you want to take advantage of what we call the fast action bonus. You order before the end of the webinar here, you can go to vectorvest.com/transform. We'll take another $100 off of that, and it'll be just $4.95. Biggest key to that pricing, and John was kind enough to just put the link into the chat box. I'll click there in a minute and show you the website. But even more important is to understand we're so confident that this program will help you that it is a 100% money back guarantee. So after the course is over, if you show you've done the work, come to the classes, watch the recordings, etc., and you're still not satisfied, I will give you your money back. VectorVest will give you your money back. You know how you hear there's no such thing as a risk-free trade in the markets? Well, this is a risk-free trade you're entering in. Okay. Risk-free trade, right? Right? You have to remember there's an old saying that the best time to plant an oak tree, you want to sit under the shade today, would have been to plant it 20 years ago, right? Who can tell me when the second best time to plant an oak tree is if you want to sit under the shade? First best is 20 years ago. When's the second best time? There we go. I knew someone would get it. Paul, first one in today. Right. It's never too late to begin to prepare yourself for retirement. Michael had it too. Now, never too late to get on a more sound footing, a better foundation, whether you're approaching in retirement, whatever it might be. Okay. The question you have to ask is how much is it costing you not to put a plan together? Right? How much did it cost you, whether you go all the way back to 2000, 2008, 2020, 2021? If it cost you more than $495, those market catastrophes, if it cost, and I'm sure it did, it cost you more than $495, let's fix it once and for all. Let's fix it so you don't have to experience this worry and this unpreparedness of not knowing what to do when the market goes. So again, $495 is all it costs, and it's a money back guarantee. Just go to that vectorvest.com /transform. I'll go ahead and click there real quick. If you have questions about anything I talked about today or anything about the course, please do me a favor and type them in. And we'll take a look. If you click on that link that John put into the chat box, you'll see you get that special pricing at $495. Okay, if you enroll today, scroll down, you get a full description again. Course. You click purchase course now, it will take you to your order here. If you're already a member, which many of you are, you don't need to fill this in. Just simply click sign in. Go in with your username and password. and it'll take you to this here. So Paul asked the elite members price. So Paul, yeah, and this is a little different because I'm an employee, so it looks a little different on mine. But that's all you have to do to get here to pay. If you're not a subscriber, just fill in that initial information that you saw there. Paul asked about, John just answered, yeah. So the elite price would be half of the original price of $995, which is $497.50. So the elite pricing on this is $497.50. Join now for $495. If you're an elite member, you can do it at any. Okay. So that is the course. Remember, Robert got back to us after his nightmare with the financial crisis sell-off. He said he couldn't rely on others. He took personal responsibility for his own investments using VectorVest's unique market timing system and its fundamental and technical analysis, stock picking techniques. He did it on his own. He went into the market. By the end of that year, had recouped his financial crisis losses. I've been relying on VectorVest since. 15, maybe a half hour a day, 15 minutes, maybe a half hour a day. VectorVest to manage my retirement portfolio, giving me the money and time to do things that are. So 495, go to that website, sign up. I look forward to having you there. Stan, thank you for taking the time to be here. If there's any questions, please let me know. Me or John, I'm going to stay on here as long as you guys want to. If you have questions, again, about anything I talked about or anything about the course, please let us know. So I'm gonna throw a red flag up there. So if you asked something earlier that I know John answered a whole bunch of questions in the background, you can re-ask that question. But we'll answer the questions now. John, you can hop in if you see any questions that I'm not sure of. I know someone will ask about the mastery sessions. So let's go up here. Randall, I do. Let's see. Randall, I'm going to answer your questions. I see one of these questions. It's sorry. Oh, hey, John. Okay, great. I'm going to answer Randall's real quick. He's here. If I order today, is a prorated cost of monthly expense subtracted? So you're a monthly subscriber? Randall, John, how would that work? Would he be able to? Okay, as a monthly subscriber, Randall, if you're an annual subscriber, oh, no, there would. Yeah, I'm sorry. I'm thinking about the coaching group. No, there's no. I'm sorry. Yeah, I'm sorry. I confused myself with the coaching group. Yeah. This one here? Rolling? That. Yeah, I can't see the YouTube. All right, great. So that's what we get there. Let's go ahead. Again, this is the schedule for the live sessions. They're going to be every Monday at 11 a.m. And I know Paul has asked, he typed in there, do you make live trades? And yes, Paul, the reason we do it on during market hours is so I can go in and illustrate the different types of trades. So, when we start doing covered calls or protective puts, show how to build a portfolio, we do it all live so that we can illustrate that. Mhm. Yep. So let's go. Yeah, I'm going to go in. I'm sorry, I should have had it open. It takes me 5 seconds to do that. Let's go open it up. So when I come down to the retirement portfolio transformation course, this is what it looks like. So when you sign, somebody asked what, kind of goes to the question I saw earlier, what's the, anyway, what happens when you sign up is that you'll get an email giving you all the instructions that you need to access the resource or the course within the VectorVest University. So what John was alluding to, this is the actual course. We have our welcome video. Each of the modules are broken down into, instead of one long module, you can focus more on each topic. I did them differently in this course. I did them shorter, so it's not like an hour and a half of one big long thing. So you have access to those, and that's the same through each module as we go through. Okay, and then you have access to the module 5, or the eliminate risk with one trade, how to trade spreads, and then you also have retirement coaching group here, where if you miss, because you guys are going to be invited, if you miss it right now, there are 6 of them posted there from the last launch of this. These will be replaced each week starting 2 weeks from Monday, or Tuesday rather. Now, if you miss a mastery session, okay, you miss a live session, what you'll see here is this is a mastery session from the last launch. This is in there for you now. The day we do the live mastery session, we replace it with the most current. So you don't, even if you miss the actual live session, you can watch it later that day, exactly, as we presented it. Bill said he purchased. First of all, Bill, thank you for purchasing the course. Said it does not show up in my courses section. Bill, you should get an email. Did you receive the email with all the directions and everything you needed? John, it must take a few minutes, right, to show up in his university? Okay, so you're saying you didn't even get the email back yet. Give it a couple of minutes. If you don't see it, you don't see the email yet, you'll need to go back in, and check your spam folder. Sometimes they can go to the spam folder. See if give that email a couple of minutes. And John, if there's an issue, Bill may just need to call product support. Is that Yeah, yeah, you were here, as if you're here and you have any issues, you'll get the 495 price. Don't. Bill said he just got the email. So Randall is asking, how do I buy the course? Randall, John, look into your chat box and click that link that's in the chat box that says, or just type in www.vectorvest.com/transform. And John just put it in there to you as well. When you go there, it'll bring you to this web page. And then you'll just simply need to follow the process. If you are a current subscriber, you'll need to just go to where it's, I'm sorry, I went through this already, so it's not bringing the page. It'll ask you to just sign in if you're a current subscriber. If not, just fill in the basic information. Done. Um, Again, these are the dates of the live sessions. The blue calendar here is the dates of the coaching group sessions. So our mastery sessions are going to be 11 a.m. Sorry, I keep saying 11 a.m. I apologize. Noon, 12 p.m., 12 p.m. every Monday. And then our coaching group is 2 p.m. every Tuesday at 2 p.m. So John and I will stick around for a few more minutes. If there's any other questions that you guys have, do me a favor. If you have signed in and joined the course, do me a favor, just type in "I'm in," just to let us know. Give you a shout out and make sure that you get the email. Remember, an email will come to you with all of the. Paul said he's in. Very good. Thank you, Paul. Fantastic to have you. We look forward to seeing you. Remember, our mastery sessions will start on the 20th. So you'll have access. By the way, when you sign in, anybody who's looking to sign in or join, you have access virtually immediately, right? It just takes a few minutes. Once you get that email, you're going to have access in the VectorVest University to the course. And as John said, if you don't see it, log out of the university and then log back in. And so you have, you can go through the modules at your own pace. And then you'll be ready. You'll hopefully have your questions written down and ready to address whatever we need to address in the mastery session. So, and again, you have access to it all for a full year. Okay. I'll tell you, just for the idea of, I mean, like I said near the end, right? If it's cost you more than $495, which it is right now if you're long positions and you don't have protective puts in place. These are the, the headwinds and the hurdles that we have to get by. You have to understand how to manage your way through these. Dean, you can shoot me an email. I can answer any questions, and we can talk about the group coaching. I just threw my email in there, so you can contact me for. All right, I'm just pausing to make sure there's no other questions, comments, concerns. Anybody who has any questions, you can call product support. You were here at the webcast, and so I'll make sure that you get that $495 price. If you have any issues, please give a call, and we'll take care of it. Aside from that, I would like to thank you all for taking the time on behalf of John and myself, all of us here at VectorVest. I hope to see you in the Retirement Portfolio Transformation course. If not, I look forward to seeing you in the near future. Please stay safe, stay healthy, and we'll see you next time. Thanks, everyone.